Hey everyone, so we're going to dive into Bitcoin today and take a look at the recent price action because we are holding some key levels by an absolute thread, and if we break them we're likely to, really start to accelerate our move to the downside. If you like the videos that we've been putting out and that I've been putting out in the last few weeks, staying on the right side of the market, telling you that we're not going to 200k, right, to be prepared and to take advantage of these potential moves to the downside, go ahead and like the video, subscribe down below so that you can follow our journey and basically we can together take advantage of the likely massive dip that is going to be happening in Bitcoin. So let's get straight into it, right? What are we doing at the minute? We are basically forming this continued bear flag, and the longer this goes on, if this was to break down to the downside, right, we are going to have a massive move and it's going to start falling apart pretty quickly because we basically broke down from this head and shoulders formation over here that you can see. Let's just zoom in a little bit to make it a bit clearer, and we touched this 1, 2, 3 times, okay, and at the minute that is just showing us that we're getting more rejection. So the continued bias is definitely to the downside, and the line in the sand for me for the short term is this 37k region, which we are holding on to by a thread. And if we break down from 37, I think we are likely to accelerate to the downside, because then we're starting to create these lower lows over here, and then maybe we start to do this, okay, and we'll talk about some of the scenarios that we've been speaking about in a moment. But on the short term, we are in a bit of a descending grinding wedge to the downside, so we might get a pop to the upside here soon, right? So we are doing something like this, and we're sort of grinding down quite correctively. So maybe we get one final pop. I said that we'll get that to about 43k. We got exactly to there and then started to break back down. So we want to keep an eye out here. So maybe we move down and maybe make one final push up. But again, that doesn't seem very likely. The only high target that I can see, like I said, is 53k if we break 48,000, but that doesn't look like it's happening. So if we break down from here, then likely we move lower, and the two scenarios that we're looking at as the most likely given the current circumstances and market conditions is going to be this move down to about 30k, potentially consolidate and bounce, okay, and then make a final move down to 24k. And if that doesn't happen, then maybe we potentially get a move straight down into $24,000 there or thereabouts, somewhere between 30 and 20. I think is likely, and to retest 30 is very likely in my opinion. A quick word on altcoins. We don't want to be trading altcoins at the minute, okay? It's a horrible environment. You can see that many of these coins, like let's just take a look at Chainlink, for example, okay? Many of these coins have done this, but it made its key recent low on about 24th of February, and we've taken this out, and I said in my Chainlink video that if we break this, we're likely to move lower. So, Chainlink and a lot of the other major altcoins, you can see that they're bleeding harder versus Bitcoin. It's not a good time to be holding. They're showing weakness versus Bitcoin. And that if Bitcoin continues to, show more weaknesses or makes a proper move to the downside, then you better believe that your alts are going to be getting absolutely smashed. So for me, I'm pretty much zero in altcoins at the minute until I see some sort of signs of reversal or something to show me that I'm not just blindly putting my money into a load of shit coins that are going to do nothing and probably not even outperform Bitcoin if the market does move to the upside. So that's a quick word on altcoins. DXY, we've been keeping an eye on the DXY, and we've now actually managed to break this really important high that we made back in December 2016, start of 2017. So we've basically broken a 5-year high here, and we're moving up just basically in a completely just parabolic move. So if we start to really get some impulse and get this going on the DXY, the next major level that I see that would make sense is this order block over here at somewhere at about $110 or $111. And it's not that this is going to crash Bitcoin and equity markets, imminently. But what we're looking for, okay, is that between this move here, since I highlighted that $97, $98, that between here, wherever the top is, or wherever this massive parabolic move is going, okay, we're looking for Bitcoin to put in a significant move to the downside, which it has not yet done. So that's definitely what we want to be looking out for. Is not that every time the DXY grinds higher that BTC has to move down, because we can make short-term moves and, you know, counter trend and whatnot, okay? But during this move here, okay, if we make it, or even in this current phase, in all honesty, because of the nature of this move, I'm looking for Bitcoin to put in either a capitulation low or at least some sort of significant low, potentially to those 30k levels. So I think that is the most likely. And you can see that what we're doing over here, the reason that I talk about this next level is that we kind of got this 1, 2, massive consolidation. We've got this 3. This looks like it's another flag to potentially move back to the upside again. So that's why I'm looking at this you know, as being a potential you know, strong move for the dollar. Doesn't show any signs of stopping currently. As we're about halfway through the video, if you're getting value, drop me a like and subscribe down below to keep up to date, okay? And you know, if you want to stay on this journey with me so that we can buy and sell these dips and these highs together and stay on the right side of the market, like and subscribe below. So without further ado, let's crack on. Back to Bitcoin here, and just a few longer term key things to note, right, is that we're currently putting in a 5th red weekly candle in a row, which we have not done since 2014 in August, okay, back over here. And the last time we did that, we finished on the last 2-3 weeks with quite an impulsive move to the downside of about 20-30%. So if we would continue to see that, okay, then maybe that's the move that takes us to $30,000. Just something to take note of, that we haven't done that for about you know, 7-8 years, and there probably will be some reversion to the mean. But typically these moves, especially when they're operating on low volume, which we can see over here, that when you get this massive low volume, you know, it's typically a precursor to a massive volatile move. And when volatility springs back into the market, okay, it's going to show us pretty clearly what direction it's going to want to go. And then if we take a look at, obviously, just continued evidence that we are in a severe downtrend and that things are not looking good. On the weekly chart, if we take a look at our key moving averages, okay, what are we doing? Look at the last 2 bear markets, squeezed in 2014 between this green 50-day weekly moving average and the blue 100-day, moved down to the next level, created a low. What do we do in 2018? Lo and behold, 4 years later, okay, wedged in between the green and the red moving, and the green and the blue moving average, the 50 and the 100-day. As soon as we broke below it, okay, move down to the next level, 200-week moving average. And what we're doing at the minute, creating low volatility, okay, in the same that we did over here. Look at this, low volatility, okay, consolidating patterns, low volatility, consolidating patterns, okay. So yeah, let's basically look for you know, potential, even over here, pretty similar back in 2014. But that's why I'm looking at that. You know, if we break down from here, just don't be surprised if we move lower. Now, just clean that up, and, you know, a quick look at the fib moving averages as well. You know, we just continued bear market structure here. It's there's no doubt about it, right? We've called this since February. And, you know, back in 2018, kept retesting all of these key fib moving averages, in particular the weekly 21, moved down and eventually formed this capitulation low. You can see here, retested it 1, 2, 3 times, made the low. So maybe this is like, we get a 1 here, and maybe we move over here and then basically form something like this potentially, okay, and then we create the low. So essentially what we are doing is we are breaking down from all these key Fibonacci moving averages, and you know, showing us that the bias is to the downside. Interesting fact on Bitcoin is that we have been talking about somewhere between 20 to 30k as a potential bottom, in particular that 24k region. And if we have a look at the 200-day moving average, in the past, whenever we have dropped about 50% or so, okay, you can see any time that's happened, that's marked out some pretty key lows on Bitcoin in the past, anywhere between that, you know, 60, 50% range. And you know, interestingly enough, as from current levels, from about 47,000, where the current 200-day moving average is, if we were to drop by about 50%, let's account for some diminished returns in this market, then that would put us at about 24k. So really interesting that maybe if we got some sort of capitulation, some crazy stuff that happened overnight, then yeah, that would be a really interesting buying opportunity. And for me, that would be a a strong buy at about 24k, where we get a lot of panic. So just keeping an eye on that, just in case that happens. A quick word on equity markets, okay? Now, obviously, we've started to create some lower lows on the macro time frame over here on both the Nasdaq and the S&P. So this is the S&P, and if we have a look at the our 200 weekly moving average, which we do tend to test from time to time, or at least get pretty close to on the S&P, we might well move down here and start to retest some of these lower regions. I would say at this order block over here at about 3600 on the S&P 500. So maybe that's a confluence with some sort of move down in risk asset markets, which is going to correlate over to Bitcoin. Same thing on the Nasdaq. You can see here that we've basically touched this or got close to that 200 week moving average. So if we get again a little bit of a push down into these lower order blocks, expect that to put pressure on Bitcoin, and you're going to see that correlation likely continue throughout these uncertain times. And we've got an FOMC meeting coming up in May, and if they do something uncertain and raise by like 50 basis points or 0.75 basis points to curb the inflation, then don't be surprised for that to be the news, even though we knew this previously, like before these moves actually happened, right? The charts are telling you that we're showing bear market structure, that that's why the charts are going to show you the news. But if something like that happens and we get uncertainty in the markets do not like uncertainty. Okay, they like certainty. Then just like I said, just expect more moves down. If the FOMC meetings, we knew that they were going to raise it by exactly even like 50 basis points or whatever it was, we can price that into the markets. But when we get these uncertain moves and uncertain news events, okay, then that's what's can cause these volatilities, especially to the downside if they do something unexpected. So let's keep an eye out on that. That's our update on Bitcoin. If you are enjoying this content, please like it down below. And if you want to stay with me to know where to buy and sell and get those really good market entries to keep you on the right side of the trade, and you're on this journey with me, subscribe to the channel down below so that you can keep up to date with my content. Until the next video, I'll catch you next time.